Hey, what's up, guys? Gonna make a quick series of videos. Posted a status on Facebook the other day. If you had any questions, to post in the comments, and I'd make a quick video on it. I'm not gonna go really into depth. Don't have a lot of time, so I'm gonna try and make them quick, sweet, and short. Questions were scanning. Scanners I use, scanning setups, reliable news sources, top X amount of things to look for when long-term investing, switching from long to short biases, and which brokers to go through when starting out. As far as the brokers, I'm not going to get into that one. There's so many different brokers out there. If you have a question on a broker, message me, and I'll talk to you personally. It's really based on what your needs are. I mean, if you're looking to invest, swing trade, or if you're looking to day trade, they all have different commission structures. Whether you're paying per share, you're paying per ticket, as far as actual buy and sell orders, all that matters. So it really just depends on what you're looking to do. If you're looking to get more information about brokers, holler at me, message me. I'll talk to you personally about it. Scanner. This is my scanner that I use. Is Finviz. It's free. I've used this for the past 5-6 years. Probably the only scanner I will ever use. Finviz.com. If you when you get to the homepage, it's going to have the Dow, Nasdaq, S&P, what it did for the day. You can click on them and change the time frame if you want to look at what it's doing for the year or whatever. Front page is going to have all your top gainers, stocks, and it's going to have right here. If you look at the signal, it'll tell you again, top gainers, stocks that are making new highs, unusual volume. If it has unusual volume, obviously you might want to check it out. It's going to probably have some. Most likely, it's going to have some kind of catalyst that set it off. And reason why it's trading on higher over relative volume. You definitely want to know why. But to make this quick, again, if you guys have any questions and I don't clarify something you wanted to know, message me and I'll talk to you personally. Go to Finviz, click on Screener, and all these different descriptive metrics that you can choose from. Click on all. It's got a lot more. Bear with me, guys. I'm doing this from a hotel in Pensacola. I'm on Wi-Fi, so my internet's pretty slow. So you've got all the different metrics. You can choose the performance, whether you want something that's up 10% today or 10% on the quarter, or something that's down 50% on the year, whatever. You got actual fundamental metrics. If you want something, a quick ratio, payout ratios, you want to know if there's any recent insider transactions for a certain stock, whatever you're looking for. There's tons of ways to customize this. I have preset scanners. These are the two I'll use. I'll just show you what they are real quick. Very, very basic. I'm really just looking for stocks that are up big. Up here in the signal box, you can choose top gainers, top losers, stocks that made new highs today, whatever. I mean, there's tons of different conditions you can choose from. I leave this one. This is my top gainer. This is my This is what I use to find intraday setups the next day. I'm looking for stocks that have a lot of eyes on them. And this is why I use top gainers, because a lot of people that are looking for stocks are doing the same thing. And therefore, when you've got a lot of retail traders like yourself or like myself seeing the same stocks, the charting patterns typically work out better. So I check a market cap. Under 20 billion is considered large, but when you get up into the mega and larger, I mean, those are your Netflix and Apple, and I don't really care for them, because when you're trading intraday setups, you're fighting algorithms and HFT systems, which are high frequency trading systems that are scalping in between the bids and asking. they're going to make the stock go wherever, which way they want it for the day. So you really have no edge. You're fighting against, hedge funds that are trading $100 million. So I'm looking for smaller cap stocks, typically under $10. Hedge funds don't really like to trade these because they do sometimes, depending, like a stock like AMD, something that trades 100 million shares a day, they do trade those. But something that's trading 1 million shares a day or 2 million shares, they're not going to play with those because they can't even get in and out of them without moving the stock price. So you're really just trading against other retail traders. So that's why I choose these. Current volume over 750K. That's not really necessary for anybody with a small account, because you can get in and out of these pretty easily. But for somebody that's trading size, if you're trading $20,000, $50,000, $100,000, you've got to be able to get in and out. If you have $100,000, or say you have 50,000 shares and you're trading a stock that's only trading 100,000 shares in a day, when you submit your sell order, say you buy a stock, you go to sell 50,000 shares, and it's traded 50,000 in the morning. Well, who the hell are you gonna sell those to? There's no one's there to buy it. So you gotta remember, if you're selling, you're always selling to someone buying. If you're buying it from someone selling. So keep that in mind if you're trading size. Most of you probably aren't. So even so, I'd still look for something over 500,000, because anything under 500,000, they move slower than shit, and you might as well go watch paint dry. So relative volume over 1. This is very important. Relative volume is probably the biggest key indicator. This is anything that's a 1 or over. It means it's trading at least double the volume. Meaning, over the last 50 trading days, say it's traded 500,000 shares. As long as it's over 1 relative volume today, it means it's trading 1 million. It traded 1 million shares today. If it's traded, 5 million shares today, it's trading 10 million. What that tells you is that there's more eyes on it for whatever reason. Maybe they had earnings. Maybe they had an SEC filing come out. Maybe buyout rumors, buyout chatter, or whatever it is. But it gives you a reason for a stock to be up. It's not just up for no reason. You don't know why. You don't have an edge. So these are two very important factors: the volume and the relative volume. Another one I use is quarter down, day up. What I'm looking for on this, I'm looking for stocks that are at 52-week lows that are making double bottoms. They're trying to break lower, but they're failing to break lower. Is what happens then. Is they start to curl up, and people start to see that, okay, the stock's not going any lower. So then you get your buyers coming in, and then you get people who are shorting for the stock to go lower start to cover their position, and the only way to cover is to buy back in. So you've got the short sellers covering, aka buying, and then you've got breakout buyers buying. So you've got all traders on your side. So I'll show you a stock that shows that here in a second. Let me go over this scanner real quick. This I'm looking for. Performance. I want it to be down on the quarter, but I want it to be up today on volume. A good example of that. Let's start with that VNR. Oil and gas name. I traded this Monday or Tuesday. If you look right here, it was down here at the 50 cent mark. So again, it's at 52-week lows. And it's sitting here banging around off the 50 cents level. You've got a lot of shorts that have been shorting this all year because it's fading. Well, as soon as it starts to curl up, those shorts are going to cover and buy in. You've got the breakout buyers, and you get these short squeezes. The only swing plays I really play are these right here. Again, I'm looking for quick moves. I'm a day trader. I'm not looking for long-term investments. I don't want my money tied up. But for a lot of people that have full-time jobs, you don't have that option. So these are also okay for looking for multi-day setup stuff, buy and hold for 2 or 3 days, whatever. But what happens is you get it banging around down here off $5. It's down on the quarter. Well, right in here, the volume starts to pick up and it starts to curl. That gives shorts reasons to cover their position and get out. And then you've got breakout buyers, and then bam, you get this explosive move off 50 cents over 100%. 3 days. If you look, I mean, you've got this stock. A quote that I like is that I've heard many times in the trading community is, look at the left side of the chart to predict the right side. And what that tells you is that these patterns happen over and over again. If you look right here, it kind of did the same thing. Back, if you look right here, this would have been the 52-week lows right here. It did the same thing. It came down and kind of was testing this 113 level, tried, popped back up over it, tried again, popped back up over it. And what that tells you is it's probably not going below 113 and short start covering. You get this move off 113 up to 210 range. It happens again down here. If you move this support line down here, it hits 150, perks up, tries to break down under 50 cents again, and bam, bangs off again. I mean, this stock's been doing this all year. So this is a very, very probable setup, I guess you could say, and it gives you a very low risk. I mean, down in here, it's at 50 cents, so you could be buying anywhere in here at 50 cents and 60 cents when you see it trying to break below 50 and it's failing, and then it starts to curl up and the volume starts to come in. Go ahead and buy and risk off 50 cents. Say you buy at 60 cents. Say you want to risk $100. Take 1,000 shares at 60 cents. It's going to cost you $600. Risk off 50 cents. If it breaks below 50, sell it, get out, bail for $100 loss. But you've got to look, you've got all these highs. I mean, you've got the next resistance level is 97 cents, $1, and you've got another one up in here, $1.35. If you look back here, it tried to break below 135 and couldn't, and then perked up. And back here, recently, it tried to test that 130 again. So you could be buying down here in the 60s, 60 cents, risk off 50s for a possible move 100% back up to 130. And that's exactly what it did. I didn't buy this. I shorted it, actually. So if you flip this chart upside down, it's the exact opposite. And this kind of goes right into another question, which was, how do you know when you're switching from long to short? Well, down here, it's testing 50 cents and it can't break. So you know this has been a downtrend. It's a beat chart. It's a downtrending chart. You've got a lot of shorts in here. As soon as it starts to curl on high volume, the shorts start to cover and you get the breakout. Well, when it gets up here to 130, you know, you've got profit taking, and then it pops right back up to $1.30. It's trying to go to 150. Again, stocks like, I've covered this in a previous video, and I go over this topic in depth in a lot of videos I'm going to be releasing in 2017, and in the DVD I'm releasing. But stocks like whole numbers and they like half numbers. So $1.50, $2, $2.50, $3. It's trying to get to $2.50. It can't. Buyers start taking profits in here, and then it pops back up, tries to go back up to $1.50 and gets stuffed at this high of $1.30. Well, right here is a good short. You can take a short right here, banking that it's going to fade and not break $1.50. So you're shorting, risking off $1.50 for a potential move back down to lows. I just scalped it. 5,000 shares. I had a 132 average, and this day it opened up right here at 126. I shorted at 132s, and I held it all day. And I sold it I covered it at the close, 114, 113, something like that. So it's 20 cents on 5,000 shares. It's a $1,000 trade. So again, like down here, it's a double bottom. It's a good buy, risking off 50 cents. Up here, you've got a double top. You can short it, risking off 150. Sentiment changes, and you know you want to be shorting. You want to be buying and shorting against the herd. So if the stock just made a huge move, you want to be looking for double tops. If the stock's beat down and banging around down at the lows, and it fails to break and it's double bottoming at the lows, people are wanting it to go lower, but it can't. So you want to be buying and risking off lows. You always want to trade against the herd, because market makers are the people who facilitate trading, and they're the ones who fill in your buying, matching buyers and sellers up. They don't make any money trading with the herd. They make money off people losing. So when people are down here shorting at the lows and it's failing to go lower, they're gonna perk the volume up themselves, and they're gonna force shorts to start covering, and then buyers to come in. And when it starts having huge moves and everybody thinks, oh shit, it's going to $2, they stuff it, and then it starts coming back down. So you always want to be trading against the herd. So there's a quick rundown on a good swing setup, and the screener I use. you can get really into depth with this. I just want to make a quick video in the screener that I use, and you can kind of see this, how I set it up. It's very basic. There's a lot of stuff you can play with in here, but it depends on how you're trading. If you're looking to invest, then this stuff matters. That's another video I'm going to go over, but I'm going to make here shortly. But if you're looking to invest or swing trade long term, maybe a month, 6 months, you don't really care about the relative volume today, because you're looking for a move 6 months down the road. You want a stock that has cash, so you're going to want a stock that beta is under the beta of a stock is basically anything under 1, it moves slower. So it's not going to be swinging up, and your money's not swinging up and down 10, 20, 30% a day. It's going to move much slower. You want to look for something that's under 1. You want to look for a stock that has cash. So if a stock has 100 million outstanding shares on the market, and it has, here, I'll show you, for instance. The only bad thing about Finviz is that they run a bunch of ads, so it does slow down you've got all these pop-ups and shit, but, reset. Somebody like, Netflix. Again, when you're searching here, I'll show you, man. When you're searching for charts, you can have them show up differently. You can have them show by chart, you can have them show by financials, whatever you want. I'll go over that in a second. But if you look right here at outstanding shares, they have 40 outstanding shares. Is nothing more than how many shares are on the open market to trade. How many shares are available to buy and sell. They've got 430 million, and if you look right here, cash per share, they've got $3 per share. So take your $3, multiply it by 400 million, you've got $1.2 billion. You've got a shitload of money. They're not going broke anytime soon, so your risk is low. And these companies, typically, when you're swing trading, if they happen to Netflix, if they happen to gap down, say you buy at $100 and it gaps down to 84, look at what happens. The volume comes in, 55 million, a bunch of volume. Because look at how many times it's tested. Again, 1, 2, 3, triple bottom. It's trying to break below $85 and it can't. And every time it hits that level, volume comes in. Because hedge funds it's a discount on price. Hedge funds are coming in. It's Netflix. It's a good quality company. It's not going anywhere anytime soon. Hedge funds are coming in and buying up millions of shares. And every time, so if you buy up in here and it gaps down on bad news or bad earnings for the quarter or whatever, you have the hedge funds at your back. You have support at your back. They come in and they buy it up, and again, it bounces right back and then eventually breaks out to new highs. So if it gaps down, yeah, you may be down for a little bit, but, if it's a good quality company, it's probably going to come right back. You can sell for a break even or hold through and wait for the breakout. And that's exactly what Netflix does. AMD, another good quality company. They have a bunch of money. When you're swing trading, you want to look for stocks that are trending up and have a lot of cash. Again, because when they're trending up and they have a lot of money, these are companies that hedge funds like to be in. And when they fade off, when they sell off, and when they have big gap downs, they come in and they start buying up shares. So your risk is very low. Because if it does sell off or it gaps down on bad news, the probability of a hedge fund coming in and buying up the shares, at least one of them, is very, very high, and that's exactly what this is. Like right here, if you're buying at the $7-8 range, and, you bought this day, and the very next day it starts selling off, and you don't sell it, you're down $1. Well, the very next month it bounces right back and then breaks out. Say you bought 100 shares at $7, and it comes down to $6. Again, as soon as it hits $6, 170 million shares come in. It normally trades around 20 million. 170 come in, hedge funds buy it up, and it bounces right back. Within a month, you're back break even. Within another month, you're up, $500-600. So you want to look for healthy stocks that have healthy trends. I mean, if you just draw a trend line through it, you can see it's up. So every time, if you connect all the lows, every time it hits that trend line or even gets close to it, it gets bought up and bounces right back. So you want to be buying this. You want to be buying the discounts when it's selling off. I mean, in this company, this sell-off, it looks scary, like it's dumping, but it's down $1. But you got to think, people are in here buying. People have to take profits at some time. When they take profits, they sell. The price decreases, and then people come in and buy the discount, and then it bounces back up. So you want to be looking for healthy trends. And buy into those at discounted prices when people are. You want to take advantage of profit taking and people selling. Going back to the scanner, when you get to your screener, when you get your screener set up, you can save your presets in here. You set whatever you want, and then go here and save your screen. So I'll go to one of my saved ones, the one we talked about earlier, and if you down here. I have it set up by snapshot, meaning it's going to show you the chart, it's going to show you some of their fundamental metrics, the average volume, and it's going to have the latest news articles. So you've got kind of a quick snapshot of what's going on real quick. You can also do it by chart. Say you do your scan and you have, you're just looking at top gainers on the day, and there's 100 of them. You can sort it by chart. Say you're just looking for technical charting patterns. You're looking for flag breakouts, or you're looking for ABCD patterns on the daily to hold for the next month. This is a good way to sort through them and run through them very quickly. If you want to look at it, just a general overview. This doesn't give you the chart, but it'll give you the name, the sector, the industry it's in. This is good for if it's, if you like right now, oil and gas is running. If you want to sort it by industry and you just want to look at biotech, oil and gas companies, you can do that. If you're looking for biotechs, you can do that. You can sort them through, go through and sort by independent oil and gas, and then you can sort by the gainer, which ones are up the most, which ones are up on the most volume, whatever you want to do. So that's all I'm going to do for right now as far as scanning. If you want to, and this is for a nightly scanner. Now, I do use intraday scanners. I use Trade Ideas. It's $100 a month, but I mean, you don't need if you're not day trading. I'm looking for moves to scalp that are moving right now. They just started moving today, but that's not really going to pertain to you if you're looking for longer term setups. Another free one that you can use to scan is Equity Feed. There's a lot of paid-for scanners that you can use. You can actually use FinViz. They have a premium service that'll give you a live intraday. It'll give you all this information. Right now it's delayed 15 minutes. So this is really what I recommend for scanning at night for swing trading. But if you're looking for intraday, you can use Equity Feed. You can use Trade Ideas. There's tons of them out there. If you have any more questions, just message me and I'll talk to you personally. Again, I'm making these videos really quickly, just because I know how hard it was starting out. The stock market is extremely vast. There's so many different styles. There's so much to it. It can be overwhelming. So I'm just trying to give back a little. I do have a business coming out next year. I'll be starting. It is going to be trading related. When the time gets near, I'll release more information about it. But I'll be getting into depth with all this. It's basically going to be a trading service / boot camp educational service. So I'll be getting more into depth. I have a DVD coming out soon, and a lot more in-depth analysis of it. But if you do have any questions in the meantime, just message me. I have no problem helping you guys out. I know what it's like being new, and I lost $20,000 before I ever made $1, and it's because I really had no help. I was trying to trade alone and trying to figure all this out on my own, and that's being just stubborn and extremely retarded. So don't do that. If you have questions, ask me. Don't just get involved and start putting your money live on the line and just lose it, because if you do prematurely and you don't know what you're doing, you're gonna lose. So if you have any questions, I didn't clarify anything, holler back at me. I'm going to shut this down and get back to the next video. Trying to think if there's anything else I missed. Yeah, if you have any questions about live scanners, like maybe you're at work, I can give you a few of them. that are cheaper that'll help you find intraday scans. But this is fine. I mean, this scanner right here, I mean, I used to use this when I was at work looking for ABCD patterns. I'd really go here. This is literally this basic. I would click on the screener. I would come here. Again, sorry, my internet's on Wi-Fi connection. Come here, I click on the top gainers, and I would just sort by volume. Which ones are up on the most volume? Like Evoke right here. It's up 43% on Friday, and it was up. I mean, if you checked in the morning, it had already traded. I think I traded like 7 million shares in the first 30 minutes. So I'd be looking at it at break, and I click on the chart. I would just look at the chart real quick, look at the daily chart, and then look at the intraday chart. You can change the time frames right here. Like if you want to hit intraday, just click on intraday, and you can use this on your phone. They don't have an app, but you can go to the website. I don't know why it's not going. Anyway, you get the picture. You can click on intraday chart and you can find out what's going on intraday. See, if you were trying to trade an ABCD pattern, or maybe you can't anymore. I guess they charge you now. Yeah, they charge you to look at intraday setups, but it's a good way to find. If you're on your lunch break, you're on taking a cigarette break or whatever the hell you do. This is a good good screener just to look at the top gainers. Check the news real quick. You can do all this right here on this site and figure out if it's a good buy or sell option for you. So I'm gonna get to the next video. Hope this helped somewhat. If you have any questions, reach out, holler at me on Facebook, whatever. Email me, call me, message me, whatever. Switch from long to short. Broker. Again, brokers. If you have any questions about brokers as well, message me and I'll talk to you personally based on your situation, and I'll go over that. All right. Have a good night.